14th Annual University of Miami Real Estate Impact Conference. Today, we bring together some of the most influential voices shaping the future of real estate, including Nadeem Meghji, Arnaud Karsenti, Peter Linneman, Willie Walker, Stuart Miller, Steve Witkoff, and Manny Cadre. We are proud to recognize our presenting sponsors: Blackstone, Douglas Elliman, H&M Development, Cap Morrison Acre LLP, Kislak Family Foundation, Metropolitan Realty Group, and Witkoff. We also extend our sincere appreciation to our platinum sponsors, our prestige sponsors, our premier sponsors, and our partner sponsors. Now let's dive into what's shaping tomorrow's skyline, right here at the 2026 University of Miami Real Estate Impact Conference. It is my pleasure to introduce Dr. Andrea J. Hewson, Professor of Finance and Academic Director of Real Estate Programs at the Miami Herbert Business School, and Dr. Charles C. Bohl, Professor and the Tony Goldman Director of Real Estate Development and Urbanism at the School of Architecture.
Good afternoon. Please be seated. Find seats. There are seats over here for anybody standing up. We have a great program for you this afternoon, and we are ready to roll.
And on behalf of the University of Miami and all of our real estate programs, welcome to the 2026 Impact Conference. It is finally here.
Woo. My name is Chuck Bohl. I'm professor and the Tony Goldman Director of Real Estate Development and Urbanism at the School of Architecture, and I'm the academic program chair for this year.
And I am Andrea Hewson. I'm a professor in the Miami Herbert Business School and the director of our real estate programs on the academic side at Miami Herbert.
So we don't usually do this right up front, but this year there was an over-the-top effort on the part of our internal and external team to make this event happen, including changes all through the evening and all through the morning. So we want to do a shout out to certain folks. They started planning a year in advance, handled every last-minute change.
For the University of Miami Business School, we would like to recognize Caitlin Shalene, Tanya Roberts, and the entire Miami Herbert event staff, and people who aren't even on the event staff except for this program.
And on the behalf of the School of Architecture, big shout out to Natalie Bixby, Roxanne Vanderput and Cicio, and that entire team as well. We have some fantastic external partners this year, and some we've worked with for a long time. So a big shout out to our AV firm, One Track Events. We had a great PR group working with us this year. Levy PR and Events, thank you, Jessica. InStyle Catering, super flexible. You know, there was a tremendous amount of flexibility this year. And Dalmastro Inc., who was responsible, created that amazing, stunning AI opening that you just saw involving university buildings and other landmarks. And they're in charge of the overall kind of visual production for today. So thanks to all of them. We also want to recognize our program committee. They've really delivered something special this year. So our board chair on the MRED side, Ricardo Caporal. Ricardo, where are you? Ricardo put together a team on our side, including Matt Adler, sitting right next to him, and Arnaud Karsenti, who's over here. And these three really helped polish the production quality and elevate it to another level this year. Thank you, guys.
And from the business school, we have the chair of our advisory board, Randy Weisberg. My eyes are not good enough to pick him out. And also the vice chair, Manny Dizaraga, who you will hear a little bit from later. So thank you all very much.
Okay. How long have we been doing this, Andrea?
I don't know.
So the Impact Conference has been jointly organized by the Miami Herbert Business School and the School of Architecture since 2012. But Andrea and I have been doing this much longer. We've been putting together real estate courses and seminars and initiatives, probably going back to, I think, the early 2000s.
Probably.
It's our 14th year for the conference. We have collectively over 125 advisory board members who support real estate education at the university, and most of whom are here in the audience.
Yes, and our advisory board members have joined with our longtime original presenting sponsors. We have had 3 people who have been with us since the beginning, who said, yeah, go ahead and try it, see if it works. Look at this. They had the foresight to support us at the beginning. That is Douglas Elliman. I see Jay Parker somewhere. There's Jay. The Kislak Family Foundation, you know the Kislak family has been important in real estate here, and also the Wyckoff Group, and the founder of that group will be with us later. Thank you for your patience at security, but hopefully you understand why we all had to go through that, because Steve is on his way. This year, we also are very happy to recognize our new presenting sponsors, and hopefully continuing presenting sponsors. We have Blackstone, H&M Development, Cap Morrison Acre, and Metropolitan Realty Group. So this is a record number of presenting sponsors for us. So thank you all.
Please take a moment, thank all of our sponsors this year who helped put together the conference. So now I remember we didn't have to use glasses last time, when we did this in the early years. So last night we kicked off with the annual VIP reception sponsored by Wyckoff, with sponsors, speakers, leadership. There was great energy in the room at Cipriani's. We did not drink much, however, because we couldn't get near the bar. Then, hoping to get a better access to a cocktail, Andrea and I then proceeded to the Bayshore Club for the annual alumni gathering. This has become an annual event as well. There are a lot of alumni here. Let's hear it from the alumni. Where are you, Canes? So after we were dropped off by one of Miami's top Uber drivers, Meghji Zaraga, we then waded into a huge turnout of alumni of real estate programs from architecture, from business, and from law, only to discover an even tinier bar on a cart, and so the university would be glad to hear that everybody stayed very sober as well. Alumni event was sponsored by the law school, home to the oldest real estate program at the university, the LLM, Greenberg Traurig LLM in real property development.
So just to give you a hint about what's coming, if you are an alum of the program, we're in the process of trying to start an alumni network of people from all of the schools at the University of Miami who are in this business. So be on the lookout for some emails that will come after the conference. Earlier this morning, we had our annual Student Alumni Cane Connection networking event here. Thank you to ACOR. We had at least 200 people here early, relaxing and chatting with each other. And we just now came from the annual Swire Scholars Luncheon, which involves current students and members of both real estate advisory boards. And we're very happy to have the longtime support of Swire Properties for that. So now we'd like to recognize the industry's future. So all of the students here, stand up. Let us see how many there are.
All of you, business,
Yes, I don't care.
MRed, law.
So please take the opportunity to engage with them during the day. They are really dedicated. This is spring break, and they're here. They'll start tomorrow, but they knew it was important to be here today.
A bit later in the program, you're going to hear from a small group of those students who just spent the last 6 months or so. They developed our annual survey. I want to thank nearly 300 of the board members and past attendees of this conference who completed the survey, and they're going to share just some of the findings they have on the impact of AI on the real estate industry.
So as the first panel comes up here and starts their discussion, I know that people will have questions, and there's time at the end of each session for some Q&A from the audience. But to get your question, you have to use the QR code, which is where?
on the
back,
on the
thank
back
you.
of the
I knew
name
it had to be
tags.
someplace. Thank you, Matt. So the QR code that is on the back of your name tag, and it will submit questions to an iPad. And I will do the questions for the first session, Chuck will do them for the second one, and then we'll both share them for the third. The other thing we want to mention is that I know networking is so crucial here. Our first networking break is 30 minutes long, so you'll have plenty of time to chat with each other. We also don't want to do anything to constrain this third panel, so that networking break is shorter, 15 minutes. So make sure you get to most everybody you want to see in that first break. So thank you.
So one thing we want you to recognize, as Andrea and I both stand here together, is this has been a partnership from the very beginning for nearly 20 years now. So a lot of universities, the schools are very much in silos. The programs do not interact, but that's not the case at the university. This has been a collaborative effort from the beginning, and it's one of the real strengths here at the university in real estate education. So thank you for 20 years of that. Just a little footnote on where we are and where we see ourselves going. In 2008, was the last time we hosted the annual ULI Fall meeting. Everybody remembers 2008? Some of you who are older painfully remember 2008. It was in June of that year that the MRED program, which I run, I got to sit down and present it to the Faculty Senate. Any of you who've been through getting a project approved at a city council, it's a little bit more difficult than that. But it was approved, and the next year, the accelerated MBA was approved. The real estate major in the business school was revived, and we've kind of been off and running since then. And it wasn't because of the crisis or anything. We were approved early in the year. We had been working at it for a while because this industry is so impactful, hence the Impact Conference, really across the economy, throughout the state, throughout the nation. This is a multi-trillion-dollar industry, and it is really important to the university, and we've been building our programs over these past years. So that was 2008, and I was on the host committee. The host committee came to town. We were in what was then maybe one of the taller buildings downtown, and they were astonished early 2008 at the sea of cranes across the downtown. And they're like, wow, we're coming to the right place, hold this conference. Well, they're going to be back for the first time since then this fall. Imagine what they're going to think when they come back now, 18 years later. Wall Street South, Silicon Valley South, those would have been unimaginable phrases in 2008. And while it's still early, they are no longer outlandish in 2026. But when you look at the industry, which really is so significant to our region, it's the real estate industry. And as one of my friends over here remarked to me, he said, look, maybe we're not Silicon Valley, but we are the Silicon Valley of real estate. And we are leaders in this industry, not just nationally, but globally. And you are our partners in carrying this forward into the years ahead. Thank you so much.
Thank you.
First up on stage is Nadeem Meghji and Arnaud Karsenti. Nadeem Meghji is the global head of real estate at Blackstone Inc. Since joining the firm in 2008 and previously serving as head of Real Estate Americas, he has played a central role in shaping Blackstone's regional investment strategy. He was named a World Economic Forum Young Global Leader in 2018 and serves as a board member of the Lupus Research Alliance. And Arnaud Karsenti, founder and managing principal of 13th Floor Investments, a Miami-based real estate investment and development firm focused on residential assets in Florida and the Southeast United States. Under his leadership, 13th Floor has acquired and developed over $7 billion in assets, establishing itself as one of South Florida's preeminent firms. Arnaud is a value-driven entrepreneur who is an active member of YPO and actively involved throughout the Miami community. Ladies and gentlemen, please welcome Nadeem Meghji and Arnaud Karsenti.
For a minute there, I thought they were talking about someone else because there were two name tags when I got in. So I think it actually is Arnaud Karsenti and Nadeem Meghji. So good afternoon, everyone. I am Arnaud Karsenti. I am managing principal of 13th Floor Investments here in Miami. And it's a pleasure for me to welcome you to today's great keynote discussion with my very dear friend Nadeem Meghji of Blackstone. The title of today's program is called Thematic Investing, Evolving to Outperform. This one is particularly personal to me. Nadeem and I met over 20 years ago at Harvard Business School, two students trying to figure out the world and how to break into the real estate industry and what the world might look like. What struck me about Nadeem then, and still does today, is his ability to cut through the noise and see the big picture. Nadeem focuses on structural change, not just where the world is or has been, but where it's going. Today, Nadeem is the global head of Blackstone Real Estate, the largest owner of commercial real estate in the entire world. Over the past 2 decades, he has helped shape Blackstone's strategic focus across cycles, from financial crisis to the pandemic to today's evolving recovery. But what makes this conversation interesting isn't just scale. It's how Nadeem thinks about growth versus value, about technology and AI, about migration and demographic shifts, and about the positioning of capital behind today's long-term tailwinds. Today we're going to talk about his journey at Blackstone, global investment lens, the impact of AI on the industry, why South Florida has become one of the most fascinating markets in the world, and just in general, have a great conversation. Nadeem, welcome. Thank you so much for coming.
Thanks for having me.
So I thought I would start with a kind of a softball question that everybody in the audience would be interested in. Who is your favorite Miami developer, objectively?
Objectively, that's a hard one. It's hard for me not to be biased. I will say, one, it's an honor to be here. Thank you for having me. You know, Arnaud and I went to business school together, as he said, and we've been great friends forever. And I've always thought, like, we're young. Like, you always think you're younger than you are. But then when we were driving this morning, he took me to all of his projects, and he's like, I'm building this tower, and I built that one, and this is what I sold it for, and this is what I did. And I was like, we're not that young anymore. Like, you've been doing this a long time, and you built an amazing business. And it's amazing to see a friend have so much success in a place that I am really, really excited to be in, which is Miami and South Florida in general. This place is just rocking right now. And if you talk about tailwinds, I mean, there's no bigger tailwind than what's happening in Miami.
Totally. So let's rewind the clock a bit. Walk us through the journey. Columbia Engineering, Harvard Law School, Harvard Business School. Did you go to any good schools by any chance, maybe? When did you realize that real estate was the path?
So I did electrical engineering for undergrad, and then it was 2002 when I graduated. I wanted to continue the academic journey, mostly because I was, not ready probably to join the workforce. And I applied to law school, got there, realized immediately I didn't want to be a lawyer, applied to business school. I get in, do the joint program, and was very fortunate. And I realized while I was in business school, took the real estate course, that this was like a really interesting business, because I'd always thought about it as sort of a business that was entrepreneurial, but was very sort of like mom and pop. My parents were in real estate, but like, you buy a building and you fix it up and da-da-da. And I learned in business school that it's actually quite an institutional business. That's what it was becoming, and there was a way to participate in a new way. But the funny thing is, I had, in 2005, accepted a full-time offer with a bank where I had interned. And I'd said, yes, like, I'll come back. And then Arnaud and I meet in 2005 after that summer at business school, and we participate in this real estate competition together, representing Harvard Business School at the UT Austin annual real estate competition, where you basically do a case study and you get on stage and you have to like solve a problem and tell a story and show your analysis. And we win this competition together. And I'm like, this was fun. Like, this is like, we just did a deal together. Like, that's what it felt like. And then we come back to Boston, and we're sitting in the student hall. And he had been telling me about this like piece of land he had tied up in Georgetown with a friend of his, and he had like re-entitled it, and he had just flipped it. So he was like a real estate developer before business school and during. And I won't say the number, but today it would seem like a small number, but back then it was big for a student. He shows me the wire transfer from the from the buyer who bought his little piece of land, and I'm like, I'm not going to go to that bank. I'm going to do my own thing. And so we then spent time figuring out how we could go do real estate deals together, and I actually graduated without a job, thinking I might be an entrepreneur, One thing led to another. I did end up at Blackstone a year and a half later, but he almost brought me to the dark side in terms of doing something more entrepreneurial.
I forget parts of that story. That was very good. The UT Austin especially, those were the days. I remember we spent our winnings, I think, like all of it that night at Austin.
I think we won 500. We literally won like 500 or 5,000.
It was 5,000. I think we spent like 6,000.
Yeah. We got really good steak.
Totally. So, but what timing? I mean, joining Blackstone in 2008 in the middle of the financial crisis, now you're running the global real estate business. How did you get from there to here? And what were the kind of the pivotal moments that shaped you along the way, and specifically the people as well?
Sure. So I joined in 08, January. So it was like right before the financial crisis, a time when I was lucky to have gotten the job when I did, because 6 months later I definitely wouldn't have. But I was lucky then to see us come out of this downturn, and I learned a bunch of things coming out of that downturn. One was just seeing the conviction we had deploying capital at a moment when everyone else was very nervous. Now, I was very inexperienced at the time and was just trying to learn, and you learned a lot in that environment. But I think in terms of my own journey at Blackstone, professionally and sort of how I got to where I am, one, I happened to join a firm that was growing very quickly. I thought it was big at the time, but it turns out that we had 20 billion of AUM, assets under management, in 2008, and today we have like 320 or something billion. So we've grown a lot over that time period, and that growth has really created opportunities for so many of us at Blackstone. But really, more importantly, it's a meritocracy where, and I try to pay it forward, we all do, is we try to elevate and support and promote people who are talented. And I know for me, there was a moment in 2009 when I've still done a grand total of 0 deals at Blackstone. And the gentleman who was a managing director actually a partner who covered retail, and at the time almost nobody covered retail because we didn't really own much retail, was moving to London. And so there was like this vacancy of like, who's gonna cover malls? And I barely knew John Gray, who now is the president of Blackstone. You probably see his LinkedIn videos. But at the time was running real estate, and I said, John, can we get lunch? And I'm like an associate, and he's running the group at that time. And he said, yeah, let's get lunch. But he was probably like, why am I having lunch with this guy? And so we have lunch, and I said, this vacancy exists, and like normally you would have another managing director cover retail, but I would love the shot. And I expected him to kind of pair me up with some senior person and like, make me feel good, but not actually do anything. And he actually said, you're in charge of malls. And I was like, I think that's a good thing. In 2009, it felt like a good thing. It was actually. There was a lot of interesting stuff, and we did invest some capital, and we did okay. But I think the more important thing was, the point with that story is sometimes you have to, if you believe you can do it, you have to ask, and you have to put yourself out there. You have to go out on a limb, and then you have to be in an environment where you're going to be rewarded for that, where people want to prop you up and support you and give you the chance to pass or fail, or to succeed or fail. And I think that's the environment that we've always had, and I've just been a beneficiary of being in the right place and the right culture.
It all comes down to those specific opportunities, those inflection points. Along the way, could you describe, for instance, some guiding principles that have really helped you grow your business and your career that have kind of stayed consistent throughout?
Yeah, I mean, as an investor, I'd say there's a few things. One is this idea of focusing on the macro and thinking about sector selection and thinking about the geographies you want to be in. So starting a bit from the top down, because if you're in the wrong sector, right, it doesn't matter how capable you are or how great of an investor or operator you are. the headwinds sometimes are just totally overwhelming. Conversely, if you're, I don't know, investing in Miami, you have a lot of natural tailwinds that are going to support outcomes. And so I think about our business, and in 2007 it was 60% U.S. office. Had we stayed 60% U.S. office through 2025 or 6, like our business probably wouldn't look the same. But what we did is we pivoted and we said, look, there are some headwinds in certain pockets of U.S. office. Let's bring that down. Today it's less than 2% of our business. Conversely, we own no warehouses essentially in 2007, but we saw this e-commerce tailwind happening, driving demand for warehouses, so we started to buy warehouses. Today we're the biggest private owner. It's 40% of our global business. In total, rental housing, data centers, and warehouses represent 75% of our global portfolio. So this idea of getting the sector selection right and the macro top down and then executing at a local level is really how you have to do it. The other thing I would say for real estate investors is you need two things. You need staying power because we're in a cyclical business, and you need buying power because we're in a cyclical business. So when things go awry, whether it's the GFC or COVID or whatever it is, rates go up. What you really want is the ability, if you own the right assets in the right sector, which is critical, to get to the other side. And the way you do that is you have to finance yourself the right way. You have to be well capitalized wherever your source of equity is coming from, so you can pay down debt, invest CapEx, lease, whatever you need to do, just get to the other side and you'll be fine. That's staying power. Buying power is having capital so that you can play offense when things maybe look a little bleak, the headlines are negative, but you can buy high quality assets at a good price. And then having the conviction, which is hard, to not look in the rearview mirror, but to look forward based on what you're seeing on the ground now, not what transpired a month ago or 6 months ago, and paying attention to data on a real-time basis to draw those conclusions. Because it's really easy to just read headlines, which if you read headlines a year ago, it would be like, don't touch real estate. But actually, people who invested in real estate 12 months ago have done quite well, and I think will going forward. It's this idea of looking forward, not backwards, when you're trying to make investment decisions.
That feels particularly relevant with where we are today. Let's get into the meat of kind of your view on the real estate market today. Where do you see where we are in the cycle, and where do you think the investor should be approaching real estate from an investment perspective?
Yeah, I mean, I think we're in a cyclical recovery for sure. Values in 2021, 22 kind of peaked in this cycle, and then rates went up and there was headwinds in office, so values went down. In the US on average by north of 20%, but it varies. Some sectors were hit very hard, some were less, some markets, some cities, but values went down. Subsequently, and we sort of said this publicly in early 24, values had bottomed and had begun to recover, but it wasn't going to be a V-shaped recovery because normally if you go back to the GFC or the pandemic, the way you got out of it was rates went to zero, and that was a major tailwind. This time you didn't have that, and you weren't going to have that. So what you were relying on is two other things, which have really happened in earnest. One is new construction coming down. In our major sectors, down something like 60%, and then an improving debt market. Interestingly, the cost of borrowing money for floating rate debt in real estate was 3% all in 2021. That went up to 9% all in 2023. Now we're down to 5%. And I think by the end of this year, I wouldn't be surprised if we're in the mid-4s. And that's going to be a function of base rates. And I think base rates likely continue to come down, short rates, because it comes down to CPI and to employment. And on the CPI piece, shelter costs represent more than a third of CPI, or around a third. And we see those based on our proprietary data growing at 1.5% year over year, but the Fed is using what we think is backward-looking data that shows 3% shelter cost growth. Sounds kind of technical, but the point is I think CPI is coming down as a result of at least housing and shelter costs, which I think is going to give the Fed room to continue to bring rates down. Once you get to rates that are in the mid-4s for floating rate debt, you start to see positive leverage. You start to see real estate produce a cash-on-cash return. You start to see sentiment and capital flow back in, and we're already starting to see it. You know, we took an asset to market, a warehouse in Dallas, like 30 days ago, and we had 22 first-round bids. That building would have gotten 5 or 6 first-round bids a year ago. So it's starting to manifest. The last thing I would say, though, is that despite this sort of early recovery, values in general, outside of high-end homes in Miami, values in general are still at a discount to where they were in 2021, on average like 15 or so percent. So in a world where many other asset classes are not necessarily at, but close to peak value, real estate is kind of this exceptional place where if you look at where we are from a historical perspective, we're still at a pretty big discount, and I think that makes it a good vintage.
But that hasn't stopped you guys from being pretty active. I think in the last couple of years, 2 years, you guys have deployed over $50 billion across different sectors and platforms. Where have you seen the best investments and sectors that you are the most excited about today?
Sure. So yeah, that you described 50 billion of deployment is really predicated on this idea that when you know you're in the early stage of a recovery and you can buy things more cheaply, like that's when you want to be most aggressive. We like to say at Blackstone, you know, investing ahead of the all clear sign. When someone gives you the all clear, it's probably because values have already gone up. So you want to be ahead of that. In terms of where we've done it, in terms of asset classes, it's the places I described. Data centers would be probably one of the most exciting areas. We're the biggest owner and developer of data centers. I like the mood music, actually. It's nice.
Nice, soothing.
Yeah.
It takes the edge off.
Yeah.
Exactly.
The AI was like, oh, you're talking about data centers. Let me play some nice, chill music. So you know, we have huge conviction in what's happening with artificial intelligence and the digitalization of our economy. So we have 140 billion of data centers around the world, and a similar amount of development potential based on the land that we hold. And it's a really global business for us and strategy. And we think we're still in the early innings of that build out. And you know, we couldn't be more excited about the opportunity ahead there. And then the other thing I would say is warehouses where, you know, I mentioned e-commerce, but the other theme is the reindustrialization of the US. All of this infrastructure build out that we're seeing actually drives demand for warehouses. Meanwhile, we're building as little as we've built in 12 or 13 years. So what that means is we look at our portfolio, Q4 was the best leasing volume and the best fundamentals that we've seen in many years. And in January, our leasing volumes are up 20%. So I think the warehouse business is poised to really continue to accelerate. And then the last one is rental housing, where we do have a shortage. We're building as much housing in the US today as we were in 1960, even though the population of the US is twice as big as it was in 1960, just to give you a sense. And you know, that translates to, people will give you different numbers, but a multi-million unit shortfall of housing in the US. And again, the way we think about everything is just supply demand and long-term fundamentals and tailwinds. And so if you think about a limited amount of supply that's structural in nature, that's a long-term tailwind for housing. Each market's different, each asset's different, but that's like the macro thing that informs us. And then geographically, I would say the US is the biggest destination for our deployment. At the end of the day, this AI revolution is so transformative, and it's really, the US is the epicenter for it. And you see it in the GDP growth numbers, you see it in the CapEx build out that's happening, and this is the biggest and most liquid market in the world. So you can't, as a global real estate investor, ignore the United States. Outside of the US, I would say in Asia, we are very active in Japan and India. I was in Japan a week and a half ago, and for a country that was previously experiencing limited growth and deflation, I mean, many of you would be very surprised if you were in Tokyo. The energy is there. Fundamentals are rocking, and businesses, corporates are, for a variety of reasons, increasingly willing to sell real estate that maybe they don't need to own to recycle into other things. And so there's this pickup in transaction activity. So suddenly Japan's become super interesting for us, and we have a huge business there. And then India is the other place that's really big for us, just because it's the fastest growing large economy in the world. So I could go on, but those are some of the things that we've been busiest with.
Very exciting stuff. Let's talk a little bit about AI. You mentioned data centers as one of Blackstone's largest investments and some of the most exciting themes. But it's also hard to ignore a lot of the chatter and the noise you hear about AI being a bubble. Obviously, everybody follows the stock market where tech stocks and software companies shoot up and crash almost in the same day. How do you put that in perspective from a real estate perspective in terms of leveraging AI?
So is the question how we're leveraging AI or how we think about where we are in the AI?
Exactly, that's what I mean, yeah.
I would say we're still, part of the challenge is these tools are moving so fast that like I could answer the question today, it's a different answer than a week ago or 2 weeks ago, and we're still kind of experimenting. We just had a summit with all of our portfolio, 180 portfolio companies to challenge them and ourselves on how we can be using AI to run our businesses more efficiently. And one of the things we like to sort of say and think about is when you own 12 or 13,000 real estate assets, you own 250 plus portfolio companies across all of Blackstone, that we see so much data. And our data and our information is our biggest advantage. And so if you can layer AI onto that, how powerful is that? And so we're starting to play with some basic tools because all of our data is in one place where I can I can ask basically our proprietary version of ChatGPT, like, how are we doing today on this warehouse that I just drove by in terms of its rents and occupancy and cash flow versus what we underwrote or assumed 3 years ago and what's driving it? And you get an answer that's very thoughtful. I'm also seeing my team, interestingly now, they showed me this interesting exercise they ran where there was a piece of land in Phoenix associated with a hotel asset, but it was excess land where you could build condos. And so they uploaded a couple of the appraisals on that piece of land where you could build condos, as well as many thousands of condo comps, like a 400-page document with just scattered information that was hard to follow, and basically asked through a verbal prompt or through a written prompt, what are the right assumptions to make in terms of the cost of building? What are the right assumptions to make in terms of sellout price? Why, et cetera, and maybe fine-tuning some of the questions as the answers came back. And basically, then they called a couple of local developers, brokers, and made a couple of very minor tweaks, but it was almost all there. And it happened in an hour. And then they were able to, because now the AI is getting integrated into various applications, ask ChatGPT to create an Excel model that would basically model the development using those assumptions over a 5-year period. And so I would say that was an experiment. That's not how we're running our business day to day right now, but I think that is where it's going over time, which is this idea of increasingly automating certain tasks, but still needing human judgment and insight to make the call at the end of the day.
Yeah, I was about to ask you, because a couple weeks ago, you called me on the phone and you said to me, Arns, AI is amazing. And I could hear the excitement in your voice. And I can't help but think, do you ever wonder that the AI will replace human judgment from the perspective? I understand the tool gathering and the information gathering, but from a judgment perspective and specifically from a decision-making perspective, at what point do you think a company like Blackstone actually could rely on AI to make those decisions?
Well, it's hard to say, but I think a general point would be that probably all of us just need to know how to use the AI tools really well. Because I imagine that they'll be an extension of what all of us do in one way or another. And I think that, of course, there's always going to be a need for human judgment. but we're all going to have to know how to get maximum leverage from these tools to allow us to be as efficient as possible. And yeah, if you're graduating from school now and you're kind of entering the workforce for the first time, I think one of the things you want to know how to do is be the one who's like the best at using these tools, the best at understanding how they're changing, how they can be used to increase productivity. Because if you show up to an interview and you know how to do that and you can explain that to the person interviewing you, I think you're going to have a lot of success, and you're going to be viewed as quite compelling and interesting. Because it's going to show that you know how to use these tools, but it's also going to show that you're the kind of person who's intellectually curious, who's trying to stay ahead of the curve, who's trying to learn, which is actually just a skill all of us want our people to have. So I would just make that recommendation.
On that note, I do want to give a quick shout out to one of our associates who built an AI tool yesterday for the tour that we took this morning, and everything we talked about today was actually built on Claude and visually and everything else, and it was done literally in 24 hours. So very cool. Let's shift gears a little bit. Let's talk about South Florida. I'd love to get your kind of top-down views on what makes this market meaningfully different than the way it felt 5 or 10 years ago.
Well, I would say this, my wife is here with me on this trip. She's not in the room, but she texted me right as I was walking in and she said, "I love Miami." And I'm like, yeah, of course, you know. It's, yeah.
We love Mrs. Meghji.
Yeah. We technically have an office here, so maybe that's a thing. So the tailwind here is so big, and what's a little surprising about it almost, even though we as a firm and our team has been very high conviction on Miami for a long time, is that post-pandemic, one might have viewed what happened here as sort of a temporary surge in either inbound migration or in terms of demand, but actually Miami just keeps, or South Florida in general, keeps moving from strength to strength. The population has grown by 2 million people in 5 years, 10% increase. And I think what's driving it is all the things you know. I mean, it's nice here. The weather's nice, like it's business friendly, the taxes, and then increasingly, I think because of the demographic shift, because the bar has been raised, now you have even better, you have better restaurants, better cultural institutions and amenities, and like, you know, I was talking to you about this the other day, but the fact that there are like 3 Michelin restaurants within like a mile of the design district and one more coming, and this steakhouse in New York that is very hard to get a reservation at called Fort Charles is coming to Miami. It's just, that's kind of what's happening here. So you really now have kind of a depth, I think, to the place that continues to get better and compound, which makes it just that much more attractive, the schools, all of that, and the talent. And by the way, a bunch of businesses are starting here. I think 1 out of every 8 businesses starting in America is starting in Florida. It's a pretty good place to make a career. And by the way, I think it's showing up in the value of real estate here and in supply-demand fundamentals. And so, you know, we have $14 billion of real estate that we own in South Florida, including 20 million square feet of warehouses. That's been pretty good. We own some apartment buildings that we acquired through a privatization we did that have been performing, I mean, as well as anything we own in the country, to be honest. So yeah, fundamental supply demand, all driven by this, again, it's macro before we get to the micro. It's not picking the right building before you pick the right city. And the picking the right city is really where you started. It's people want to be here. And when that happens, good things tend to happen to investors.
Yeah, couldn't agree with you more. First of all, quick story on the Fort Charles. Craig Robbins, who's the kind of the godfather of the design district, I was talking to him about the Fort Charles, and he basically told me he couldn't get a reservation at Fort Charles in New York. So the only way of getting one is to actually bring them into Miami, and hopefully we'll be able to get a reservation once it opens there. So it's a good anecdote. But I couldn't agree with you more relative to the Miami tailwinds. Here's an interesting statistic. Before 2021, there were 27 trades per year on average that were 10 million and up. Today, that number is 86. as of last year. That doesn't seem like cyclical or seasonal. That seems kind of structural. What do you make of that kind of stat, for instance?
Well, I think there's a fixed supply of, you can build condos, but single-family homes in the right neighborhoods, there's a fixed supply of those, and you are land constrained for sure in Miami. So that's one thing. The second thing is you definitely see a shift amongst people who have the flexibility to choose where they live. You're seeing many people who run businesses, who run financial firms, technology companies, say, you know what, like maybe the uncertainty around regulatory or taxes or otherwise the politics in some other parts of the country make Florida a pretty good place to be, particularly now that all of these amazing amenities exist here, and you have so much talent and depth of talent here that maybe we should live here. So I think there's this shift for sure, and maybe a share shift towards South Florida from other parts of the country. Combination of all of that plus businesses that are like local, that are here, that are just growing and expanding, means more wealth is being created. People are doing well here, and that translates into higher real estate value. So it's not surprising, and I definitely agree that it's secular in nature. I would not think of this as being a short-term phenomenon. Are
there neighborhoods, and you come here quite a bit, and you're every time you you stay in different places. Are there neighborhoods that you're particularly more or less excited about than others, or are there new neighborhoods that you're learning about and things of that nature?
I don't know Miami as well as literally almost anyone in this room, so with all humility on that, but I guess it depends on what phase of life you're in. But we were in Coconut Grove today because that's where I'm staying, and last night I walked around the neighborhood and like the main street and had like a nice dinner, and it's like a really nice place, and you've got like amazing schools, and so like, yeah, I know it's probably one of the nicest places, if not the nicest place in Miami, but it's really nice. Honestly, I'm a huge fan of all of Miami. When I was younger, the only part of Miami I knew was Miami Beach. I've now learned that there's a lot more to this city than Miami Beach.
Right. I think a lot of people come down for Miami Beach, and then they learn, they explore. And they also get to know a little bit about our traffic and our infrastructure,
yeah.
And then they start to change their mind a little bit. Let's switch another gear. Something happened today that got me thinking. We had this awesome tour. We started early. We ran around Miami for a couple of hours. And about 2/3 of the way through, we stopped at a food truck, and you said to me, why don't we just grab a couple of those breakfast burritos? And we just sat down on the boardwalk and had some breakfast burritos that were delicious, by the way. And it occurred to me, man, this guy's one of my best friends. He runs this big global platform. He's kind of making decisions that are literally changing the landscape of the real estate industry worldwide, probably every day. But then I also thought, thinking about you as a father of 2 kids, a great husband, a great friend. How do you manage it all? How do you put it all together?
It's very nice of you to say, and it was a really good breakfast taco, I agree. So, it's a good question. I love my job and my work, and I'm definitely blessed. Like I said, when I started in 2008, I would have never suspected that I would still be at the same firm, or that, never mind that I'd be running the business. And that's definitely a blessing, and I'm very lucky. And I work with amazing human beings, including I have a partner, Jacob Werner, who's our CIO, global real estate CIO, who's in the crowd, who's based here in Miami. So he has figured out how to live here while having a very senior role in Blackstone Real Estate. But it's a blessing to be around such a great group. But at the same time, I do have a huge duty and obligation, but also desire personally to be with my family and to be a good father of my 2 daughters and with my wife, Sheffy. So it's finding that balance. I travel a lot. 2 weeks ago, I was all over Asia. Earlier this week, I was in the Midwest, and then I came down here. But I'm traveling recently almost every week. And so one of the things I try to do is get home for dinner, be there, hang out with my kids. And then, we're in a global business, so if I get back online after they're in bed, that's totally cool. I have a very patient wife who's very supportive, and she knows I love my job, but it is finding that balance. And I think the thing I'm trying to the journey, by the way, which I'm not perfect at, is trying to be present when I am with my family, because you can always be distracted and always be thinking about work if you let it, and that's kind of, that can be a little bit dangerous. So I think it's finding that separation and then finding a way to be present when you're with your family.
Right, and drawing those hard lines about those time commitments, et cetera.
Totally.
Yeah, you do a great job.
Yeah, like one example would be I pick my daughter up from school on Friday afternoons, and like, you know, it doesn't matter what's happening at Blackstone, like that is in my calendar as like immovable. And you know, it's like my favorite thing is to see her like sprint across the school gym and like jump on me. Like I'm not gonna trade that for any work meeting.
That's very cool. That's awesome. We've got an audience of a very dynamic audience that's a great, very diverse, and about a third of the audience, if not more, are students who, frankly, in our shoes, not so long ago ourselves. And I remember we were in the audiences like these, listening to people talk about the real estate business, and I have to ask the same question we would be asking them at the time, which is, what kind of advice would you have for whether it's a grad student or an undergrad student or even a high school student in the audience that might be here today and maybe have snuck in somehow? What advice would you give the young people looking to be in this industry?
I think it's a great industry, is one, and it's a big industry, and it can be as local as you want it to be, or it can be as global as you want it to be. So it's actually a good time, because I think anytime you come out of a bit of a downturn, which is what we've experienced, it means there's more opportunity. So I think one, really interesting place to be, but two, I think going back to where I was on AI, like one should be cognizant of how the world is changing, technology, and really leveraging those tools and understanding how they work and being curious. I think probably more today than ever with the rate of change, how things used to be done, or learning from people who used to do certain things in a certain way, like that's great, but actually the most valuable thing for firms like ours is like, what do the young people on our team actually think? Like, how do they shop? How are they using technology? What do they do in their spare time? What experiences do they value? Like, the world is changing, and if you're young enough where you're just graduating from school and you're kind of like, you're just entering the workforce, like what you're doing and how you live and how you think is like very relevant to our business, because we're just a real estate business. What we do is a byproduct of how people live and work. But again, we also probably need the people who are youngest, who are growing up with these tools, to be the ones leading us in terms of how we use the tools and how we maximize them. So to the extent that you can do that and be someone who cares enough and is curious enough to want to do it. I think you can't really fake curiosity, so you can like fake it for a short period of time and like learn the tool and then go to the job interview and then like stop using it, and you just won't progress. You have to be, and you have to embrace as a mindset, like constant evolution, growth, things changing. I'm gonna learn. No one's gonna teach me. I'm gonna go grab it and learn it myself. And that curiosity, I think, will sustain you, not just as it relates to technology changing, but the world changing. And it's gonna be a tool that's gonna be more valuable for all of us over the next 5 or 10 years than in any prior time in history, I think.
Yeah, hearing you say that, it almost feels like rather than looking at AI, if I'm a young student thinking about my position in my career moving forward, rather than thinking about AI as a potential disruptor of a job, rather thinking about it as a way to almost like collapse the time frames and accelerate my path, you know, in a much more exponentially faster way than it would have without it. So it's more about embracing the tools rather than being afraid of them. I think
Exactly.
I hear you say that.
Exactly.
Yeah, it's funny. Well, like even within the household, like a year or two ago, I remember the schools were thinking about AI as a way that they were trying to avoid cheating. Like you can't use AI, or they had these like different codes at my kids' school. Now we went back the other night for curriculum night, and they were actually talking about, they were advertising how much they're using AI in every class. It was a total paradigm shift because the world's now really realizing how important of a tool it is. Anyway, we can go on about AI for a long time. We've got a couple minutes for a couple questions. I think, Andrea, you have some from the audience we can maybe pull together. That's okay.
Thank you so much for these comments, and a flood of questions has come into the magic iPad. So I have to find them, yes. So let me get the negative one out of the way right away. Get it done. Assuming AI negatively impacts employment, which then decreases consumer spending, aside from data centers, where might you see growth in asset classes?
I would say it's a good question because, I think we're in this mode now of everyone is asking questions about disruption, and it's on everyone's mind. One interesting thing as a side note is that with all of the news about software disruption or this or that, which is the next sector, I'm sensing from a lot of our investors actually that that's actually increasing the kind of, or making real estate more compelling as an asset class in one respect because it's viewed as it's hard assets, they're tangible, we're still going to need places to live, we're still going to order things online and therefore we're still going to have warehouse demand, et cetera. Now there might be certain types of real estate that are impacted in one way or another, but I would say at a high level, warehouses, for example, will continue to be very, very important because the supply chain keeps moving closer and closer to where people live. We continue to order things online, and actually, I think agentic commerce will make that even easier. And by the way, Amazon Prime last year fulfilled 8 billion deliveries that were same day, or 8 billion items same day or next day for its customers, which was a 30% increase year over year, which again drives demand for these last mile warehouses. So I think technology will be a tailwind for things like that, and in some ways AI might actually help that sector. But it's early and we're looking at all of this and we think about it and we talk about it in our investment committee, and I think it's a good question because it's one that we're all gonna have to ask no matter what we're investing in.
So speaking about your investment committee, a couple things about what you're thinking. Here's a fun one. You recently made a $6 billion investment in the marina space. The institutional capital is flowing into that. There's very little supply. So what are your thoughts about the future of marinas as an investment class?
Sure. So our infrastructure business at Blackstone acquired a marina business in the US here, Safe Harbor, and I think it goes back to supply and demand. So the thing about marinas is that there are not new concessions being given for new marinas. So you have like a fixed supply of marinas, and anytime you have a fixed supply of any sort of commodity, it means that pricing can improve over time and value can appreciate over time. And if you have a platform and a team and a business where you can then go aggregate and buy more marinas, especially if they're maybe undermanaged, that's always a good thing. And if you believe that there is a tailwind long-term around boating, yachting, et cetera, and depending on your view of that, I think we have a pretty constructive view on that. That means more demand over time. So it's a business we like, but I think the interesting thing there is everything is just about supply and demand at the end of the day is how we think about any business we invest in. And again, that goes back to the macro. Once you have that view, then you find the business in that sector where you can express the view. But it doesn't start with a deal, it starts with a view of what sector and what theme you like.
Okay, thank you. We all know how wonderful it is to have constrained supply in South Florida. What other areas does Blackstone have its eye on? Anything else attractive to you from an investment perspective?
In South Florida or in general?
Well, in Florida, actually.
In Florida? Well, we also like hotels here. We bought a hotel in Brickell recently, Miami East. We bought the W in Fort Lauderdale. So, hospitality has been a big theme for us because if you talk about an AI world, going back to your question of what are the winners as a result of AI, well, I think hospitality and experiences and resorts will be a potential winner to the extent that we boost productivity and wealth and, that's something you could see happen, and Florida is a great place for that. So we're invested in that, apartments, warehouses. I don't think we've built a data center in Florida, so we'll have to see when that happens. But yes, we're very active here.
Now, any geographic areas particularly attractive, either the northeast part or the west coast of Florida?
You know, we did buy a large hotel asset called the Sunseeker recently on the west coast of Florida. And I actually did my Christmas vacation in Naples, which I love. But I mean, listen, the biggest market in Florida is South Florida. It's where we are, so that is the bulk of our investment capital.
Another area that might be slightly worrisome, I never know, you have a large part of your portfolio in rental real estate, and recently there have been some public pushbacks on that. Anything worry you? Anything you're keeping an eye on there?
Well, I think some of that is, you know, there was some obviously news around the president's proposed kind of moratorium on institutional purchases of single-family rentals. And I think where that comes from is this sense that, and I think it's true, that housing has become a lot less affordable. We believe that the solution for that is actually much more supply and much more building, because again, it comes to supply and demand. And the places in the country where you've had the most building, you've had prices go up the least. And in places where you've had the least building, or you've had more regulation, like in New York City in 2019 with new rental regs, the rents are up 50%. So we think that the solution is really new supply. And I think for us, we want to be part of that solution. We want to invest in adding supply of single family and multifamily, and also we want, to the extent that we can, share real data and facts to help inform the narrative around this issue, because it's a really important one. And I think most economists would agree with what we're saying. And I think that you see it more in the press, where I think there's maybe a better understanding now than perhaps ever that, you know, we need a bunch of different policies that will help us add to the inventory of housing.
Oh, thank you. Let me change tracks a little bit. How do you leverage your law degree? Do you think students should think about a joint JD MBA type program these days?
Yeah, I'd say the law degree was it was fun to be in law school and learn, for me personally, because I enjoyed it intellectually. I wouldn't say that it necessarily has translated into like a very direct, tangible benefit in the same way that being an electrical engineer in undergrad hasn't. But what they do is they teach you probably more how to think systematically, how to think in a sort of logical, rational way, and how to problem solve. And I guess one of the skills that I think I've tried to build on and improve over time, and that I think maybe is one of my strengths, is the ability to like look at a problem, break it down into its pieces, focus on the thing that matters, and not focus on all the stuff that doesn't matter. And so the clarity of thought and the way of thinking and the process, I think going to law school, being an engineer, or just frankly being in an academic environment where you're forced to analyze problems, solve problems, and think rigorously and analytically is just a good training for the world we're entering into. And I think, again, even more important as the world is changing.
You know, it's interesting, having known Nadeem for so long, it just occurred to me that while he thinks very big picture and he makes very big picture decisions, and his style and his even his investment thesis is very much macro based, when you listen to him and you have a conversation with him, first of all, it's always very easy to understand. It's number one. And number two, it's very practical. It's always like talking about like the actual details of the situation we're talking about. Like when we talk about a deal or something, you don't go 30,000 feet. We actually talk about the specifics of that. And I think I can't help but think that I was realizing that I think your background, the engineering background, and even the law degree, where you've obviously very detail oriented, allows you to act like that, even though you're very much able to think big picture. And I think that macro-micro lens is a real skill, and it's something that, frankly, I've learned a lot from you about. So it's really good to see it in action.
You know, one thing I would just add is I think, you know, if you're like in a job interview, or if you're writing an email to someone, or if you're trying to present your solution to any sort of complex problem, I've found that most people think that a complex sounding answer is a smart sounding answer, but it's much, much harder to give a simple and shorter answer. It's much harder to present a transaction that you're trying to invest in 5 pages than 30, because if it's 30 pages, you throw the kitchen sink at it. You just throw every piece of analysis you have, and then hopefully it makes sense at the end. But trying to distill it into 5 pages, or trying to take a 3-page email and distill it into 4 bullets that really matter, requires actual insight and thoughtfulness that is very valuable. I used to think like when Warren Buffett would say things, I'd be like, he makes it sound so simple, like too simple. Like, how is that possible? But it's because that's just the way his brain works. I wouldn't say my brain works that way. It's like a journey to try to be that way. But I'm always trying to be that way. And I do think there's a sense in which no matter how complex a problem is, there tend to be only a couple of variables that really, really matter. And focusing on those things and blocking out the rest and the noise is really, really important as an investor, but also just like whatever you do for work.
The skill, for sure. I have one question for both of you. This one came through. How do you think about when you first entered the industry? Do you go with a big firm? Do you go with a small one? Or do you try to start on your own?
This is a great question for the two of us.
It's a good one to end.
Because we definitely went different directions. Okay, we can end on this one. Do you want to go first?
Unlike Nadeem, I was always unemployable.
Yeah,
so you were actually
true.
employable. So you've always had that.
That's
I
true.
never was able to, yeah.
But we're actually a great case study. I actually think you couldn't have 2 better people up on stage for this particular question, because what it will tell you is that you can go down either path and have some measure of success, and you can find fulfillment whether it's building something on your own or going and working for someone. And our personalities are very different. We love each other, but we have different personalities. I tried when I graduated from business school to do what Arnaud is doing for the first little bit, and even at my last year of business school, trying to go kick up deals and find things. And there are certain personality types that works really well for. It's just sort of like entrepreneurial, constant, crazy optimist. In his case, he didn't know as much as he thought he knew. But that was actually an advantage when he was 24 or 25, because he would walk into meetings with like developers or landowners who had been in the business for 30 years, and he'd be like, my name's Arnaud Karsenti, and you know, I'm a developer in Miami. Meanwhile, he had like done 1 deal or 2 deals by then. But the reality is that confidence and that courage to take a risk and the belief and then the perseverance and all of that, I know I'm speaking for you, but this is my observation of you, has resulted in you building this massive, super successful business here in South Florida, and very few people could do that right out of school. I certainly didn't have that, because I realized that for me, I needed to learn more via apprenticeship. I needed to learn from other people who had done it before and see the patterns and learn the skills and pick up the nuggets along the way, so that, and then I could build on those and refine them. But for me, I needed to be in that environment. I needed to be in more of a structured place, and that allowed me to thrive. And so depending on your personality, you could be somewhere in between the two of us, where maybe it's a small firm, not a big firm, where you still get some of the benefits of being in a structured environment, learn from people, but you have the opportunity to be very entrepreneurial and go build things and do things from a very young age. And so it's going to come down to your temperament. The most important thing, I think, is whatever you end up doing, if you work for someone, make sure that it's people who are going to be invested in making you better, making you smarter, who are going to invest in your success. That matters more than the name of the firm. That matters more than the pedigree of the firm, or you know how well known it is. It's really about the people, and if you're working with good people, somehow good things are going to happen. And also, where you work in your first job doesn't matter because the career is way longer than most of you think coming out of school. And so this is just like one, and it's actually a small first step in a very long career. So again, it's going to be about picking up the skills and being with the right people. It's definitely not your final destination, and I think sometimes people overthink it and they get overly nervous and anxious that this is like the be-all, end-all thing that's going to happen in their life. It's literally your first job. Promise you it doesn't actually matter in the grand scheme of your life. And I say that in the most positive way, because if you have a good experience, or if you don't, you can go do the next thing and build on that and keep compounding. So don't put so much pressure on yourself.
So with that said, do you want to trade?
I would. You want to move to Manhattan?
No.
Okay.
It's all good.
That's
well,
what I
you
thought.
answered for both of us. This was great. Thank you, my friend, for doing this. This was awesome.
Thank you so much.
Thank you.